includes the production of goods and services both. Creation of utility. We know utilities create in different forms. It's a form utility, place utility, time utility, all the different kinds of utility which are created is a part of the concept of production in economics. First, I'll go through a bit through the study material, and then I'll move on to the multiple choice questions. And again, we will move on to the theory, and like that we'll do it. So, the factors of production, there are a lot of questions also to come up from the portion of factors of production. We know there are 4 factors of production: land, labor, capital, and entrepreneur. Land, as we all know in economics, denotes free gifts of nature. Anything which is a free gift of nature, that is called land. So it's not only the earth, the surface, but also beneath the earth, that is the mineral resources, the water bodies, the mountains, the plateaus, the forests, all these are land in economics. So anything which is provided freely by God, free gifts of nature. Next, so land will have a perfectly inelastic supply from the point of view of the entire economy. From the point of view of the economy as a whole, the supply of land is fixed. It cannot be increased. However, for an individual firm or a particular industry, the supply of land can be increased, can be elastic. But if a question is come across that supply of land from the point of view of the economy as a whole, from the country, for the globe as a whole, the world as a whole, obviously that is inelastic, is fixed. Land is a primary factor of production, but again, it is not an active factor. It is a passive factor of production because land itself cannot produce anything unless and until labor is employed on it. Land is perfectly immobile in terms of geographical mobility. Land may have occupational mobility, but it cannot have geographical mobility. And the economic reward for land, for the use of land, is rent. Labor, the next factor of production. Labor, we know, is a mental or the physical efforts put in by the laborer, right? The mental or the physical work done by the laborer. A worker working in a factory, the work which he is doing in the factory is also labor. And when I am teaching you, that is also labor. When a doctor is treating his patients, that is also labor. So the reward for labor is wages. Coming to capital. Capital in economics is a produced means of production. Anything which is produced by man and is used for further production, that is called capital. Produced means of production. Anything which is produced by man and is used for further production, that will be called capital. Entrepreneurship or entrepreneur. Entrepreneur is a person who basically conducts 3 functions. He initiates a business idea. He bears the risks and uncertainty of the business and innovation. As per Sumter, the main function of entrepreneur should be innovation. Risk and uncertainty bearing is also definitely a function of the entrepreneur. Factors of production can be classified into 2 types depending upon the time period. We know in production there are 2 time periods. Everyone must be doing this: short run and the long run. Short run is that time period in which a firm does not have enough time to change all the factors of production. That means in order to increase or decrease the production, we can change only a few factors and not all the factors of production. That is in the short run. Whereas in the long run, we can change all the factors of production. In the long run, we have enough time so that in order to change the production, in order to adjust the production, we can change all the factors of production. So we have in the short run fixed factor of production and the variable factors of production, but in the long run, all factors of production are variable, all can be changed. Coming to theory of production and the production function, we know what is production function. Everyone must be knowing this. Production function shows the functional relationship between inputs and outputs. Rather, it shows the maximum output that can be produced with a given quantity of inputs, or vice versa, minimum quantity of inputs which are required in order to get a given level of output. Both ways, with a given combination of factors of production, how much maximum output can be produced, that is production function, or vice versa, for producing a given level of output, the minimum factor of production required, that is also called the production function. It shows the technical relationship between inputs and outputs. Now, since there are two time periods, short run and the long run, the short period and the long period, so we have two types of production function, the short run production function and the long run production function. Everyone must be knowing that the short run production function is also called the law of variable proportion, or it is also called law of diminishing marginal returns. And the long run production function is called law of returns to scale. Now, till this portion, I'll move on to a bit of MCQs so that you're able to understand the concepts. Just give me one moment. I hope the screen is visible. The MCQ screen is visible. Everyone? Okay. Just wait 1 second. Now I think it's must be visible. Okay, thank you. Thanks for the response, everyone. So, production may be defined as an act of option A, creating utility. As I said, production economics means adding to utility or creation of utility. Next, which of the following statement is true? The service of doctor are considered production? Yes, that is right. Service of housewife are considered production? Obviously no. Though utility is being created, but exchange is not involved. When mom cooks food, that definitely creates immense utility, but exchange, that is monetary reward, is not involved. So that is not production. Number 3, which of following is considered production in economics? Again, a similar question. Option A is production, teaching CS students in the CS institute by teacher. However, the rest 3 are just only for pleasure. When you sing a song before friends, if you're singing song professionally, then that is production. But if you're singing before friends, that is not production. Flying a kite for pleasure, teaching to friends in a library, that is again exchange is not involved, so that is not production. So 3 answer is A. Next, number 4. The entire process of dash is nothing but creation of form utility, place utility, time utility, and personal or service utility, of which there is nothing but production. Production creates all these forms of utilities. Next, which is the following is not a factor of production, obviously man. Labor, capital, entrepreneur are factors of production, but not man. Number 6, land refers to natural vegetation, yes. Soil, yes. Free gifts of nature, yes. Air, yes. Now, what will it do? So, obviously, the rest 3, that is natural vegetation, soil, air, all are free gifts of nature. So, if a question comes like this, obviously, your answer would be C, because that is the most broadest category. Air is a part of the free gifts of nature. Soil is also part of free gifts of nature. Natural vegetation is also part of free gifts of nature. So you have to be specific in taking the answer. It has to be free gifts of nature, land. Next, number 7. Which of following is not a characteristic of land? Not a characteristic of land. Obviously, option D, that's number 4. It is produced by forefathers. Obviously, that is not a characteristic. Supply is limited, that's correct. It's immobile, that is correct. Usefulness depends upon human effort, that is also correct. So, not a characteristic option, number 4. Next, labor refers to, obviously A B answer hai, B is also answer, but actually the more appropriate is C. All human effort, physical or mental. So, 8 is C. Good answers coming up. Next, number 9. Which of the following is not a characteristic of labor? Which of the following is not the characteristic of labor? Obviously, answer is A. Some human and psychological factors considered while dealing with labor. Labor part differs from laborer to laborer is correct. Labor is a mobile factor is correct. Always productive is correct. Capital refers to number 10 is C. Capital refers to produced means of production. Next one. 11. It is that part of individual or social wealth which is used for further production of, it is that part of India's social wealth which is used for further production of obviously consumer goods and producer goods both. Option C. Number 12. Capital is a, number 12. The answer is number 12. Yes, it's not a flow concept. It is a stock concept. Majority answers which are coming up was wrong. Uh, Capital is a stock concept. Capital is not a flow concept. In economics, income is a flow concept. Capital refers to stock of line got disconnected somehow. Now am I audible? Yes, now I'm audible. अभी ठीक है? So, what is capital formation? Capital formation is accumulation of new capital goods in the economy. For capital formation, remember, there are three stages. One is savings. Second is mobilization of savings. Third is investment of the savings. Savings, mobilization of savings, and investment. So for 13, which are following is not included in the stage of capital formation. That is, answer is B. Mobilization of income is not included in the stages of capital formation. Ankita, Sanjana, you went wrong earlier. Next, number 14. Which of the following is a function of entrepreneur? Obviously, D is correct answer. Vidushi, that's right. All of the above. Initiating a present enterprise, risk bearing, and innovation. All other functions of entrepreneur. That's right. Which of the following is not the function? Number 15. Not the function of entrepreneur. I'll enlarge the screen a bit. Yeah. Obviously, D is the correct answer. Mobilization of savings is not the function of entrepreneur. The rest three are. According to Scumter, option D, 16, the answer is D. According to Scumter, the task of entrepreneur is to continuously introduce new innovations. 17. Obvious answer is B, production function. Tanisha answers right. Production function shows the relationship of inputs and outputs. Uh, 18. The production function is the relationship between given combination of inputs and highest resulting output. 18. Answer is B for Bombay. Its highest resulting output. Because production function shows the relation between given inputs and the maximum output that can be obtained. So answer is B. Next. Obviously, D cannot be the answer because all levels of output that can be generated, all levels, that is not the right answer. Someone asked why. So next, good with Shubham. Moving down to 19. The short run, as economists use the phrase, is characterized by, what is a short run? All inputs variable is wrong answer. Obviously, A is correct. A. At least one fixed factor production, the firms neither leaving nor entering the industry. In the short run, entry and exit of firms is not possible, and there is at least one factor which is fixed. The short run production functions as subject matter of. Yes, 20. Again, some people went wrong. This law of variable proportions. 20, the answer is D, the law of variable proportion. Now it has three stages. We know the law of variable proportion has three stages. First, we have increasing returns. Second, we have diminishing returns. Third, we have negative returns. So the short-term production function of the law of variable proportion covers three stages showing the technical relationship, the trend of increase in output with the increase in the variable factor over a fixed factor of production. So it's a law of variable proportion. Answer 20. In the long run, we know all inputs are variables. 21C is the correct answer. 21C is correct. Good response coming up. Very quick responses. 22. The period of time in which the plant capacity can be varied. plant capacity. That means you can change the capacity of the plant. That is, fixed factor can be changed, and that is only possible in the long period. So 22, the answer is C. To economists, the main difference between short run and the long run is that 23, read it. To economists, the main difference between the short run and the long run is that anyone? 21, 23, A is not possible, as all inputs are fixed. That's wrong. Option B is also wrong because the firm varies all of its inputs. In the short run, at least one of the firm's input level is fixed. Input level is nothing but factors of production. So 23C is the correct answer. 24. The long run production function is a subject matter of. Short run production function, as I said, is the subject matter of law of variable proportion. And the long run production function is a subject matter of laws of returns to scale. Now, in the short run production function, I hope everyone remembers that there are three things. One is average product, other one is marginal product, and the third one is TP, total product. Total product refers to total output produced by employing the variable factors of production. Average product is total product divided by quantity of the variable factor. Total product divided by quantity of the variable factor of production. That is average product. And marginal product is the additional output which we receive by producing an additional unit, the additional output which we produce, which we get by employing an additional unit of the factor of production. Extra output which we get by employing an additional unit of the variable factor production. That is called marginal product. Or rather, it is change in total product divided by change in the units of the variable factor. So 25 onwards, some questions related to AP, MP, and TP. Average product, marginal product, and total product. Average product is defined as option C. 24 का answer I already said. No, someone. 24 answer is D. Laws of return to scale. In the long run, laws of return to scale operates. 25. The answer is C. Total product divided by the variable input. You get the average product. 26. The change in total product resulting from a change in the variable input. Change in total product resulting from a change in the variable input is what? Obviously, it is marginal product. So 26D is the correct answer. Anusha, you went wrong. You said marginal cost. It's marginal product. We're talking of the theory of production. We're talking in terms of units. So it cannot be cost. Cost has to be in terms of rupees. So yeah, it's D. Not an issue, nothing to be sorry. 27. The marginal product of a variable input is best described as, yes, B is the correct answer. Ankita and Jyotishri. The marginal product of a variable factor in variable input is best described as the additional output resulting from a 1 unit increase in the variable input. 28. Marginal product mathematically is the slope of the, very good answer coming up, total product curve. Marginal product mathematically is the slope of the total product curve. Next one. So 28, answer was A. Marginal product mathematically is the slope of the total product curve. 29, we already discussed a couple of times. Law of variable proportion is applicable in the short run only. Now, law of diminishing returns applies to the short run, but not the long run. It applies to short run, but not to the long run. Next, 31. The law of variable proportion comes into being when? Option B, 31. 31. The law of variable proportion कब exist करता है? When does it exist? Obviously, there is a fixed factor and a variable factor. Option B. The law of diminishing marginal returns indicates that. Now listen, law of variable proportion has three stages: the stage of increasing return, the stage of diminishing return, the stage of negative returns. However, the most important stage for any producer to operate is the second stage, the stage of diminishing returns. Hence, the law is at times also called the law of diminishing marginal returns. The law basically states that when we go on increasing, when we go on increasing the quantity of the variable inputs on a given quantity of a fixed input, when we go on increasing the quantity of a variable input on a given quantity of a fixed input, then the average product and the marginal product of the variable input must eventually decline. The AP and MP of the variable input must eventually decline. That means what? That average product or marginal product may increase at the beginning, but ultimately they will have to diminish. The marginal product and the average product may increase at the beginning, but ultimately the average product and the marginal product will diminish. So, 32, the law of diminishing marginal returns indicates that marginal returns eventually decline. They will eventually decline. Thirty-three, the law of variable proportion examines the production function with one factor variable keeping quantities or other factors fixed. Yes, Tanisha, that's right. Next, coming to 34, if there is an improvement in technology, now obviously for these type of questions you must know the assumptions of the law of variable proportion. The law is based on several assumptions. Like one assumption is the state of technology should remain fixed. That is, technology should remain unchanged. That means, suppose with one land and one labor, we started the production. Then, on that same one land, now we are applying two laborers, but they must be using the same techniques of production. Again, one same land with three laborers. Again, the same one land with four laborers, and we go on increasing the labor on that fixed plot of land and we study the behavior of production. Now, in that case, we'll have first increasing returns, then we'll have diminishing returns, and then we'll have negative returns. But the condition is that the state of technology should remain unchanged. So, 34 says if there is any improvement in technology, then dash may rise instead of falling. Both A and B, marginal product and average product, both may rise instead of falling. Because what we said, both AP and MP will fall. But if the technology is changing, both may increase instead of falling. So 34, the answer is C. Coming to 35. Read these questions. Yes, Sanjana, I'll definitely explain AP, MP, and TP from the graph. I'll definitely explain. Um, just give me one moment. I'll pick up that portion. Let's see if it's there in the study material. Yeah, the screen must be visible to everyone. I think the screen is visible. Yeah. So on the graph, on the screen before you, you find that just in the upper panel, we are having the total product. In the lower panel, we are having the AP and the MP. Up to OL1 amount of variable factor, we find that on the OX axis, we are measuring the amount of a variable factor, and along the OY axis, we are measuring the total product, average product, and the marginal product. What I'm saying is up to the OL1 amount of the variable factor. When on a fixed plot of land, the land is fixed, right? We started off with one labor, then we applied one more labor. So maybe just to take a short numerical example, with one labor, if the output was 10 units, with two laborers on the same plot of land, we will have not 20 units. We may find that we are getting 28 units or 30 units or 25 units. That is, with every increase in labor in the initial stage, the total product will increase at an increasing rate. The total product will increase at an increasing rate. And therefore, you'll find that the average product and the marginal product both are increasing. You find the lower panel, the lower diagram, that AP and MP both are increasing. And remember, while increasing, what do you find? The marginal product is greater than the average product. The marginal product is greater than the average product. At that L1, we have a straight line drawn. You know why? That straight line shows that, in the upper panel you written stage one. The first stage is stage of increasing returns. The stage of increasing returns ends over there. And that stage is called stage of increasing returns. Now, the MP, marginal product, you find the lower panel is highest at the point H. The highest point of the marginal product is point H. That point is called point of inflection. Point of inflection. There is a significance of this point. Till this point, the total product increases at an increasing rate. Thereafter, the total product continues to increase but at a diminishing rate. I'll be very sorry, I cannot go too much in depth into the topic because it's a crash course and we have limited number of classes in which we have to complete the syllabus. So crash course basically means a revision of the entire syllabus, right? So we have to be fast because in just a small span of 6 classes, we'll have to complete the entire subject of 100 marks, which obviously is too short to complete in detail. We have to be a bit fast. So please cooperate, everyone. And I'm very thankful to you all for your wonderful responses. So the first stage will end at the point L1. At that point, you find, AP was increasing all throughout, but MP has started falling. MP reached its highest point at the point H. Focus on the diagram because you'll be able to solve a number of MCQs for this portion. And MP started falling. But MP will cut AP at the highest point of AP. MP is equals to AP at the highest point of AP. And that is the end of the first stage. The first stage ends where average product is highest and the marginal product is equals to the average product. Right. Thereafter comes the second stage. The second stage is the stage of diminishing returns, wherein we find MP continues to fall, AP starts falling, and total product continues to increase at a diminishing rate. The total product starts diminishing, continues to increase at a diminishing rate. This stage will come to an end at the point L2, and that is a point where आप गौर से डायग्राम को देखो, ध्यान से डायग्राम देखो. There's a point where marginal product is 0 and the total product is highest. Marginal product is 0 and the total product is highest. That is the second stage. The second stage ends over there. And this is the best stage for any operator to produce, to operate. Because here we are getting the maximum returns out of our variable factor. Still, if on that same plot of land, if we go on increasing the variable factor, then we will start getting negative returns. Because now the fixed factor has been optimally utilized. And even after that, if we go on increasing the variable factor, the marginal product will become negative. And you just see in the diagram, marginal product has gone below the x-axis, that is, it has become negative. And the total product starts falling. So definitely, if any producer has reached the third stage, then that is called, a stage of economic absurdity. Absurd stage hota hai wo. It's not worthwhile to operate the third stage. The operator will have to reduce the variable factors and will have to try to come to the second stage. So this was basically from the diagram part. Someone requested me and explain this portion. Hope ma'am or sir your doubt is clear. Coming to question number 35. When various factors are required to be used in fixed proportion, an increase in one factor will not lead to any increase in output. 35, the answer is B. Because if the nature of production is such that In order to increase the production, we have to increase all the factors in a fixed proportion. Look at the question. When various factors are required to be used in fixed proportion, what does it mean? If I am increasing one factor, I need to increase the other factor as well. Otherwise, production will not increase. If that is a system. In increasing only one factor, we will not get any increase in output. Uh, Coming to question 36. I want you all to answer this. It's an easy one. Question number 36. Yes, answer is B, 100. That is the correct answer. Because marginal product of the third unit, the marginal product of the third unit, the first was 200, then 350, then 450. The third unit, from second to third, from 350 we move to 450. The answer is definitely 100. I don't know why some of you had said A is wrong answer. Next, 37. If the marginal product of labor is above the average product, if the MP is above the AP, just a while ago we'll have gone through the diagram. It must be true that. What's the answer? Anyone? For 37, what should be the answer? For 37, yes, that's right. C, not B. How come some people are Albin, Shivani, you're saying B? It's C. Why? Because AP is above, MP is above AP, and that is the first stage. And in the first stage, obviously, average product is rising. Average product is rising. That is the right answer. Answer is C by many of you. 38. Average product of labor, sorry, 38. The average product of labor is maximized when marginal product of labor 38. Average product is maximized when the marginal product of labor, yes, Sanjana Tiwari answers right. Answer is A, equals the average product of labor. Yes, Ashwini Lakshmi and others, you're right. It's A. Right now in the diagram we have seen now, that diagram is a masterpiece uh, for answering lot of questions based upon this. When MP is equals to AP. Next, so 38 was A. Coming to 39, just 1 second. Yeah. Coming to 39, if MP is equals to AP, then is if MP is equals to AP, then look at the options carefully. Look at the options. I got only one right answer from Shivani, that is AP is not changing. When MP is equals to AP, then AP is highest and is constant. People need to uh, know the concept of this topic of theory production. Yes, Priya Sharma, that's the right answer. If AP is MP and AP are equal, at that point, AP is actually highest and constant over there. So 39, the answer is not changing. Yes, that's right. Answer is not changing. It's highest and constant. Coming to question 40, when AP is, I've tried to give you, I'm trying to give you questions, a similar question being put in different manner so that you feel more confident in answering the questions. Because multiple choice question exams are more dangerous in this sense. One question can be put in many ways before you. Just see number 40. When is AP at its maximum point? 40. Obvious answer is A. When AP intersects MP. Right. Okay, that's A is the correct answer. Coming to 41. If MP is below AP. When is MP below? You remember, in the first stage, MP is greater than AP. In the second stage, when average product is falling, then MP is lower than AP. In the second stage, when AP starts falling, MP becomes lower than AP. Uh, Altaf, someone has asked about the books for CSET. Right now, I'm talking here, teaching foundation. So I'll focus section. And you are saying that is the study material provided by ICSA is enough. Obviously, the study material provided by ICSA are enough. Though you're obviously you're free to refer to any question, other textbooks if you have. So 41. If the marginal product is below the average product of labor, it must be true. That answer is C. Average product labor is falling. It's not negative. Priya Kumari, you said answer MP is negative. That's wrong. Because questions MP is below AP. It must be true that. Then MP is negative only in the third stage, not before that. So it must be true that then A cannot be the answer. C's answer, the average product is falling. MP will be less than AP when AP is falling. So try to be more particular. You need to study everyone this portion. A lot of wrong answers are coming up. आप लोग को इस पोर्शन का आइडिया होना बहुत जरूरी है. 42. When MP is positive, then total product is. Yes, the answer is correct. Increasing. The total product is increasing. That's now good answer. And 43. 43. When TP is maximum, when total product is maximum, then yes, many answers coming right. Then MP becomes 0. When TP is maximum, MP is 0 at that point. 44. When MP is negative, then total product is, yes, decreasing. 44 is B for Bombay, that is decreasing. When MP is negative, MP जब negative हो जाता है, तो total product starts decreasing. Next, 45. All these questions, I hope you understand, only for that one diagram. And obviously, this diagram is based upon the 3 stages of the law of variable proportion, which in depth you must know properly. 45. At the point of inflection, marginal product is maximum, I said. The point of inflection is that point where the marginal product is maximum. Next, 46. Dash of a factor means that due to technological requirements, a minimum amount of that factor must be employed, whatever be the level of output. 46. Anyone can you tell me? Dash of factor means that due to technological requirements, yes, very good answer coming in. Mudul, Tanisha, Ajay, Pallavi as well. It's indivisibility. Indivisibility of factor means that due to technological requirements, a minimum amount of that factor must be employed, whatever be the level of output. And indivisibility leads to increasing returns in the first stage. The indivisibility leads to increasing returns in the first stage of the law of variable proportion. Coming to 47, law of increasing returns operates due to indivisibility of factors, of fixed factors, and division of labor and specialization. So 47 is both A and B. 47 is both A and B. Option C. Next, 48. In the law of negative returns, there's a third stage. So in third stage, what happens? Yes, many answers. 48. 48. We're talking 48. Yes, option C. I think people are answering for 48. Total product declines and MP is negative. That is 48. That's correct. 49. The law of negative returns operates due to, the third stage. Why does it happen? Because now the fixed factor has become relatively small, relatively less, and as compared to the variable factor. On one small plot of land or on one plot of land, if we have overcrowded it with more and more labors, then the stage of negative returns is bound to operate. होगा ही. So, two excessive quantity variable factor related to the fixed factor. Option D by many of you is correct. Very good going. Next, in stage 1 of the law of variable proportions, the marginal product of the fixed factor is A, positive. Yes, Aishwarya Lakshmi, that's right. 50 is A. In stage 1, the law of variable proportion, the marginal product of the fixed factor is positive. In stage 3 of the law of variable proportion, marginal product of the variable factor is 51. Yes, B, Neha Gupta. This right answer, it's negative. So these are revision classes and it's a crash course. You can just see so many questions from that one diagram. If that's clear, if that concept is clear, a lot of questions can be solved only based upon that small portion of theory of production in the short run. Next, 52. The best stage to operate. Which one is the best stage to operate? Obviously, the stage of demolition returns we discussed a lot of times. 53. So 52 was B. That's right. 53. A change in scale. Now comes the long run. In the long run, you must know what happens. All factors of production are variable. So in the long run, all factors of production are changed in the same proportion. That means, just for the next 5 minutes, let us discuss this law of returns to scale in the long run. In the long run, what happens? We have to increase all factors of production in the same proportion. That is, suppose first we are using one land with 10 laborer, then two land with 20 laborer, three land 30 laborer, four land 40 laborer, and so on. And in the long run, law of returns to scale operates, which is three stages. First, increasing returns. Second, we have constant returns. And third, we have diminishing returns. The law of returns to scale, which is applicable in the long run. There's a long run production function is also called. We have three stages. First, it is increasing returns. Then we have constant returns. And then we have diminishing returns. And remember, every firm passes through a very long phase of constant returns. in the long run. One more thing, when we call increasing return, when we call it constant return, and when will it be called diminishing returns? Very simple, three things. If as a result of increase in inputs, output increases in a greater proportion, then that is called increasing returns. क्या मतलब? If you've increased all inputs by 20%, listen these things and you'll be able to answer a lot of questions. If all inputs are increased by 20%, and as a result, if output increases by more than 20%, that means if output increases by say 30%, 40%, or 50%, then that is called stage of increasing returns. Why? Because output has increased in a greater proportion than increase in input. When we will call it constant return? If inputs have increased by 20% and output has also increased by 20%, then we call it constant returns. And when we will call it diminishing returns, if inputs have increased by 20% and output has increased but by less than 20%, say only 10% or 5%, then we call it diminishing returns. So coming to 53 onwards, a change in scale means that all factors of production are increased or decreased in same proportion. So 53A was the correct answer. Coming to 54 onwards now. If as a result of 50% increase in all inputs, the output rises by 75%, then it is a case of, now you have two options, A and B. A saying increasing return to a factor. Return to a factor is short run. The return to a factor is law of variable proportion. And returns to scale is applicable in the long run. So if you have increased 50% increase in all inputs, when we are saying that all inputs, that definitely means you're talking of long run. That definitely means you're talking of the returns to scale. So answer is 54 was B, increasing returns to scale. Coming to 55, in the long run, if a very small factory were to expand its scale of operations, it is likely that it would initially experience, now tell me, economies of scale. If a small factory is going to increase its production capacity, initially they will experience economies of scale. On going through your study material, you'll find that there's a topic, economies of scale, internal economies, external economies. Economies are basically the advantages, benefits of the scale of production. So initially when we're expanding all the inputs, we start getting economies of scale of production. At a very later stage, after a lot of expansion has taken place, we may start experiencing diseconomies of scale or disadvantages or demerits becomes. Coming to 56. Try to answer this one. I've already explained the concept. Wait. Yeah, 56 is for you on the screen. Try to answer this question. It's a really good one. I got only two right answers from Mrudul Nayyar and Harshit. The rest all have been straight away. Ashwarya, and all many of you are wrong. You know why? Because one labor, I explained it right now with an example. One labor, one capital is giving 200 units. Two labor, two capital is giving 400. So that is constant. Why? Because you have doubled the inputs, output is also doubled. So that is A. That is constant returns to scale. Increasing returns takes place when output has increased in a greater proportion. Then we call it increasing returns. But here, output has increased in the same proportion. Try to read the question properly. One labor, one capital, 200 units. So now you have doubled the labor. That is, one से two हो गया, capital भी double हो गया, and output is also just double, 200 का 400. So that is not increasing returns, that is constant returns to scale. 56. 57. An individual firm passes through a long phase of constant returns to scale in its lifetime. I also explained this right now. 58. Solve 58. If all the inputs are tripled, if all the inputs are tripled, means thrice, triple, three times कर दिया, and the resultant output is doubled, then it is a case of, yes, good answer now coming up, diminishing returns to scale. That's correct. 59. If decreasing returns to scale are present, then if all inputs increased by 10%, then 59. Yes, C is the correct answer. If all inputs increase by 10%, then what will happen? Topic was short. If decreasing return scale are present, then output will definitely increase by less than 10%. Next, 60. If as a result of 80% increase in all inputs, output increases by 25%, then it is a case of what? Yes, answer is C. That is now right. Because inputs increased by 80%, output is increased only by 25%. So it is called decreasing returns to scale. Coming to 61. Dash are those economies of production which accrue to the firm when it expands the output. Now listen, here you have two things. One is internal economy, other one is external economy. So dash are those economies of production which accrue to the firm when it expands the output. So obviously that benefit will be received only by that firm who has increased the output. So the answer is internal economy. It will be reached by only by those firms who have used those techniques. It will not accrue to other firms. Answer is C, internal economies. Internal economy arises purely due to endogenous factors, means internal, or because of exogenous factors. Exogenous factors are external factors, and because of exogenous factors, we get the external economies, not the internal economies. Next, 63. Which of following are internal economies? Obviously, all of these are internal economies. Next, 64. Which of the following are not internal economies? Obviously, none of these because all the three are internal economies. When you go to the portion of internal and the external economies, you'll find all these portions. Internal benefits are those benefits which can be reaped by the firm itself, by no other firm. If my firm is a bigger one, I will be able to reap the financial economies in terms that if my firm is a bigger one, I will get loan from the bank at a lower rate of interest. If my firm is a bigger one, I will be able to employ the best of the technology. I'll be getting the technical economies other firms will not be getting. If my firm is a bigger one, I may be able to produce many product lines and that increases my risk bearing capacity. I get risk bearing economies. But these benefits will not accrue to other firms in the same line of industry. However, what are external economies? When the number of firms starts increasing in the industry, then all firms will start getting some common benefits. The benefits which are external to them, those benefits are common to all firms. Those are called external economies of scale of production. So 64 was D, none. Coming to 65, 65, everyone, just go through it. Dash the benefits accruing to each member of the industry as a result of the expansion of the industry. That means if the industry is expanding, that means that all the firms will get those benefits. Then they have which benefits? They are called external economies. Next question was 66. Which of the following are external economies of scale? Yes, D is the correct answer. All of these are external economies. 67. 67. Which of the following are not external economies? Anyone? 67. What should be the answer? Now, better marketing facilities is not an external economy. Marketing facilities अगर better है वो आपका internal strength है वो आपका है वो तो point मैं क्या बोल रहा हूँ technological external economies are external. Growth of ancillary industries is also external. But better marketing facilities is internal. Chances C. 68. The cost that firms incur in hiring or purchasing any factor of production. Now, from here onwards, we start moving down towards cost. Till question number 67, we were dealing with the topic of theory of production, the short run, long run, and as well dealing with the internal and external economies. From here, we'll start with cost. In cost, we know there are two types. One is explicit cost, one is implicit cost. There are more types. What is explicit cost? Those expenses, those costs which we have to pay to outsiders. You have purchased raw material from a vendor, that is an explicit cost. You have paid the wages to the workers, that is explicit cost. You've paid interest on loan to the bank, that is an explicit cost. And what is an implicit cost? The cost of the factors of production owned by the entrepreneur, that is implicit cost. What's the point? In economics, explicit and implicit, both the costs are taken into consideration for calculation of actual economic profit. In accounts, we do not take into account the implicit cost, but in economics, we take into account. So, in case implicit costs are present, and they will always be there, we always remember the economic profit, the profit as per economics would always be lower than the profit as per accounts. Because in accounts, we don't take into account the implicit costs. So coming to question number 68. Definitely implicit 68. Obviously, that is explicit, that is not implicit. Some people went wrong again. 69. The cost incurred on the factor of production. Cost incurred on the factor of production is called what? Accounting cost, economic cost, marginal cost, the implicit cost. So obviously, when it is incurred on the factor of production, now when in MCQs are stuck, you first use your lifeline of 50-50 कि ऐसा दो ऑप्शन कौन सा जो नहीं हो सकता है. I just try to give it right. So the cost incurred on factors of production is called, it cannot be marginal cost, it cannot be implicit cost as well. So दो चला गया, बचा दो accounting and economic. Obviously, the cost incurred on the factor of production is called the economic cost. 70. Dash is an implicit cost of production. Dash is an implicit cost of production of 70. Let me see, anyone can answer this. Just 1 second. Screen is creating a problem. Yeah, 70. Dash is an implicit cost of production. Obviously, interest on owned money capital. That is an implicit cost. That is called explicit cost. 71. Economic cost means. Economic cost means obviously accounting cost plus the implicit cost. So 71 is A. Who's reading the next questions very quickly? Try to find out the answers for the next few questions. So 71 was A. 72. If there are implicit costs of production, then 72. Yes, Tanisha, your answer went wrong. If there is implicit cost, always remember implicit cost अगर होगा तो economic cost will be more than the accounting cost, and hence the economic profit will be less than the accounting profit. Yes, the answer by Pallavi by KG Play, this is right. Economic profit will be less than the accounting profit. So 72 is B. 73. Listen to the read this question carefully. Suppose that a sole proprietorship is earning a total revenue 1 lakh. क्वेश्चन को ध्यान से देखना. Total revenue 1 lakh है and is increasing explicit cost of 75,000. Explicit cost means the cost which you're paying to outsiders. So in that case, the accounting profit comes to 25,000. But आगे देखो, if the owner could work for another company for rupees 30,000 a year, if the owner could work for another company, implicit cost क्या होता है? खुद का factors of production का cost. That means your own salary, rent of your owned premises, interest on money invested by you, all this implicit cost. So in the accounting sense, this sole proprietor is earning a profit of 25,000 in the accounting sense, but there is an implicit cost of 30,000. So there becomes an economic loss of 5,000. You got the point? There's an economic loss of 5,000. The answer is A. The firm is incurring an economic loss. So 73 was A. Coming to 74. Suppose that an owner is earning total revenue 1 lakh and is incurring explicit cost of 60,000. So if we stop over here, we get an accounting profit of 40,000. Accounting profit is 40,000. Please remember, if the owner could work for another company for 30,000 a year, then 30,000 is the implicit cost. Two ways. 40,000 minus 30, you're getting an economic profit of 10,000, or vice versa. 1 lakh is revenue minus economic cost. Economic cost will include 60,000 plus 30,000, 90,000. So 1 lakh minus 90, you get a profit of 10,000. Got it? 75. So for 74, I hope you got the answer. No? 74. The answer is the firm is earning an economic profit of 10,000. That was A. 75. Identify the fixed costs for the following: fixed cost and variable cost. Now from here we come to the next portion. The few questions were from explicit cost and implicit cost. Now we'll move down to the fixed cost and the variable cost. Fixed cost and the variable cost. We know that there are two time periods of production: the short run and the long run. So in the short run, since we have two types of factors of production, the fixed factor and the variable factor, right? So in the short run, we have two types of cost: the fixed cost and the variable cost. So in the short run, there will be a difference between fixed cost and variable cost. But in the long run, there will be no such difference, because in long run, all costs are variable. In the long run, all costs will be variable because all factors of production are variable in the long run. Is that question clear? So now what is the fixed cost? The cost which does not vary with the level of output. The cost which remains unchanged. So 75. If someone has said, like Pallavi, you have said labor cost, I request you all to read the portions carefully to have a proper understanding. Because ma'am, labor cost is a variable cost of production. Because the wages which we pay to the factors of production, that goes on increasing. Higher the production, higher the wages; lower the production, lower the wages. Electricity bill is also a variable cost of production, because many people are answering B. I need to focus on this point. I think electricity expenses are also variable, because greater the production, greater will be the electricity consumption. Again, one more thing: if you have stopped your production process for 15 days because of lockdown, if you have stopped your production for 1 month because of this lockdown, definitely your electricity cost would be zero, except the meter rent. The electricity bill will not be there. You will not have to pay wages to the laborer. Labor cost in economics means which you're paying to the laborers. Cost of raw material also cannot be the answer, because raw material cost is again variable. Mohammed, Sohail, many people, Tanisha are answering D. Cost of raw material was also not related to production. Come on, try to understand. During the lockdown period, obviously the cost of raw material of every specimen was zero, because no production, no cost of raw material. Higher the production, higher the cost of raw material. But the salary watchman is a fixed cost. Production come ho ya basi, even if the production is less or more, watchman will get the same salary. Yeah, fixed cost is what? Which will not vary with the level of production. The salary of the watchman, the salary of the permanent staff, rent of the factory, interest on borrowed capital. These things do not vary with the level of output. So for 75, yes, the correct answer is C. Even if it's not directly related to production, that does not matter. Salary of watchman here means, remember the difference between salary and wages. Salary is paid to the permanent staff. So labor cost, electricity bill, cost of raw materials, GST, excise duty, all these are variable cost. And fixed cost is property tax, rent of land, rent of the showroom, interest on borrowed capital. These are fixed costs. Next, 76. I'll request you all to go through 76 and 77 properly. Read these portions. Be quick and find the answers. So 76 fixed cost. Yes. Now many answers are right. Depreciation. Again, Abhinav and some people went wrong. For 76, cost of cloth. Cost of cloth, the piece which is paid to workers, the cost of electricity, all these are variable expenses explained. But depreciation, owing to time. Owing to time. That means that whether you produce or not, depreciation will have to be charged for the entire year owing to time. The answer is C. 77. Which of the following is not a fixed cost? For 77, which of the following is not a fixed cost? Yes, now it's correct. Many of you have now got the concept. Very good. Now I find that people have understood the concept. B, cost of electricity and fuel, that is not a fixed cost. Payment of interest on loan, depreciation, building, rent of good on all these are fixed cost, but cost of electricity and fuel is a variable cost. Coming to 78, which cost increases continuously with the increase in production? Obviously, variable cost increases. Yes, that's right, KG Priya. It's 78. It's D, not B. It's not B, KG Priya, I'm sorry. It's D, variable cost. Variable cost increases continuously with the increase in production. Fixed cost remains fixed. Now here you must know the shape of the TFC curve or the TVC curve. Total fixed cost. Total fixed cost curve is a horizontal straight line parallel to the output axis. But the total variable cost curve is constantly increasing. It is an inverted S-shaped curve. It increases continuously. Coming to 79. Which of the following is a variable cost in the short run? 79. The variable cost in the short run. Yes, thankfully it's B, wages paid to the factory laborer. Many of you have now correct because the rest three are fixed costs. B is the right answer. Next, 80. Variable cost includes the cost of, question number 80. Please read, judge, and then only speak the answer. Now, there's a good answer. अब लोग सोच समझ के आंसर दे रहे हैं. Good. Materials bought. That is a variable cost. The rest three are the fixed cost. Now, coming to the total fixed cost and the total variable cost curve, 81 onwards. Read the questions. I'm just giving you 1 minute time. So read a few questions. Yes. 81. As output increases, many answers were right. TFC remains constant. 81. Many people answered right. Total fixed cost remains constant. Ankita Singh, some of you went wrong. Jyotishri, That's wrong. As output increases, total fixed cost remains constant. As we said here, that total fixed cost remains the same, remains constant, remains fixed, irrespective of the level of output. You should be careful in answering. 82. Total fixed cost curve is a horizontal straight line parallel to the x-axis. The right answer. 83. A firm produces zero output in the short period. 83. What is the answer for 83? This is a bit quick. Go on answering. 83. The firm produces zero level of output in a short period. Yes, very good answer by Mehnur. It's the fixed cost will be positive. It cannot be zero. Variable cost positive तो ठीक होता ही है, but variable cost will not be positive. If zero output, variable cost will be zero. Remember, the variable cost curve starts from the origin. Reason is very simple. Logic is very simple. If we have closed down your production for 1 month during the lockdown period, what it explained, your cost of raw material was zero. So variable cost is zero. So B cannot be the answer for 83. For 83, if a firm produces zero output in a short period, its fixed cost will be positive. Answer is C. 84. As output increases, total variable cost increase. 84 is A. 85. Total variable cost curve is upward sloping. And as I said, it is actually inverted S shaped. Here the answer is upward sloping. 85. 86. If a firm produces zero output in the short period. Now I want to get the answers from you people. For 86, I want the answer from you people. You can read it. I just need to see that what have I been able to deliver you so long. Obviously, some people went correct. Its variable cost will be zero. Most of you are correct. Some people still went wrong. Muskan Jain, you think its total cost will be zero. That's not possible. Total cost still exists. Some people said D. They're also wrong. Its average cost will be zero. That's also not possible. Even if production is zero, average cost will be there because of the total fixed cost being present. 87. Which of following statement is correct concerning the relationship among the firm's functions? Obviously, total cost is actually equals to total fixed cost plus total variable cost. I'm not going by the options first. Listen. Total cost is equals to what? Total fixed cost plus total variable cost. Right? So option A is not possible. Option B will also not be possible. But option C is possible. Why? TFC equals to total cost minus total variable cost. Why? Because you change the sides. We said total cost is equals to total fixed cost plus total variable cost. So we change the sides, you get total fixed cost is equals to TC minus TVC. So 87, the answer is C. 88. The vertical difference between TVC and TC is equals to. Let me first move on to the study material once as provided by the institute. I'll show you one thing. Coming to this diagram, I hope it's before you on the screen. It's visible. Screen sharing has been done. Screen is shared now, everyone. Yeah, thank you. Thank you. Uh, you just see on the diagram, the total fixed cost curve is a horizontal straight line. Total variable cost is starting from the origin and it's constantly increasing, but this is an inverted S. Now remember one thing, total cost. Total cost has started from the point TFC and it's increasing constantly. It's parallel to TVC. You see at every point, the vertical distance between TVC and TC is constant. Why it is constant? Because of the presence of total fixed cost. Because of the presence of total fixed cost, the gap between TC and TVC is constant all throughout. You got the point what I said? These portions you have to read and understand properly from the study material. That's very important. So, coming to this portion, 88. The vertical difference between TVC and TC is equals to what? Obviously 88. The answer for 88 was the answer. Anyone? Yes, C. TFC. That's the right answer. Next, 89. Total cost curve is total cost curve is total cost. It's not total fixed cost. It's total cost curve. Total cost curve. Remember, again, some of you started answering very fast. I said no love at first sight in MCQs. Read the questions properly here. Yes, now someone is correct. Yeah, few people are correct. It's D, upward sloping. Don't be in a hurry. So 88 cancer, someone asked me to repeat. Mahanur, 88 cancer was C, TFC, total fixed cost. For 89, the answer is D, number 4, upward sloping. That's correct. 90. If a firm produces zero output in a short period, options, ध्यान से देख के, options, read the options properly and then only answer. Don't give wrong answers. 90. Correct. Its total cost will be positive. Correct answer coming up by a few students. Neha Gupta, Ankita Singh, Khushi Jain. Neha Gupta, that's right answer. Midul Nair. Coming to 91, average fixed cost. Um, Average fixed cost is what? Now let us discuss this first, then we'll move on. Average fixed cost is total fixed cost divided by quantity. Total fixed cost divided by quantity. Let us try to come down to this portion very quickly for the study material. Yeah, before you on the screen, total fixed cost divided by units of output. That is average fixed cost. And if you go through this table, this is a master table. And if you study it properly, you get a lot of properties of the diagrams. And this is all you must have done in your class 11 and 12 as well. Average fixed cost, if you see numerical values, they're constantly diminishing. Sorry, it's 200, 100, 60%, 50, 40, 30.3, 28, 26, 25, 22.2, 20. Average fixed cost diminishes continuously. The shape of AFC curve is basically called rectangular hyperbola. The shape of AFC curve is called rectangular hyperbola. It constantly diminishes, right? And you must remember that AVC curve, average variable cost, ATC, that is average cost. These curves are U-shaped. Average variable cost curve, average cost curve U-shaped. Why? because of the application of law of variable proportion. Because of the application of law of variable proportion, the AC curve, the AVC curve, they're all U-shaped in nature. And MC curve, marginal cost, is also U-shaped. And this with diagrams for the, yeah, though this is a diagram in which we have all the curves, a few small points. Marginal cost curve, you see the dotted line intersects the AVC curve and the AC, average cost curve, from their minimum point. And few things to be noted. Average cost curve is falling initially. MC curve is also falling. But all throughout, when average cost curve is falling, marginal cost is lower than average cost. All throughout, when the average cost is falling, marginal cost lies below the average cost. At the minimum point of average cost, MC is intersecting AC, and thereafter, for a further range of output, both AC and MC are rising. But when they are rising, you see MC is greater than AC. When rising, MC becomes greater than AC. These portions have to be, in detail. You must know their explanation with the theory, so that you are more confident in and answering the questions in the examination. Uh, I'll change the screen share to the MCQs sheet which I have prepared for you all to increase your confidence level. So, question number 91, the average fixed cost. Now see what should the answer for 91. So 91, it cannot be. Now the average fixed cost, someone was answering A. Shubham, मैं यहीं पे हूँ. The average fixed cost remains the same whatever the level of output. It's not. That is TFC. Average fixed cost, what happens? It diminishes as the output increases. Try to read the options, then choose the correct option. 92. Average fixed cost cannot be 92. Now let me see. Uh, 92. I'm asking 92. Yes, Abhishek Singh, Shivani, I think the answer is right. It's C. It cannot be 0. Yes, Manu Vidul Nair, it cannot be 0. Because AFC is what? TFC by quantity. TFC is always positive. Now that divided by output, that can never be 0. 93. Which of the following curve is never U-shaped? Obviously, average fixed cost curve is never U-shaped. AFC curve is never U-shaped because AFC curve is constantly downward sloping. The rest three, average cost, marginal cost, average variable cost, they're all U-shaped. But AFC curve, as I said, is a rectangular hyperbola. It is never U-shaped. So for 93, the answer is D, average fixed cost. 94. All the following are U-shaped except the obviously AFC curve, the same question. 95. Solve 95 carefully. Numerical based question. Yes, Vinayak has given the right answer. Very good. A firm's average fixed cost is 20. It should be 20 at 6 units. 20 at 6 units. That means what? Total fixed cost is how much? 20 into 6. 120. If average fixed cost is 20 at 6 units, then total fixed cost will be what? 20 into 6, 120. Pucha, what will it be at 4 units? At 4 units of output, how much will be the AFC? So 120 divided by 4, that is 30. The answer is B. Answer is B. That is 30 rupees. 3030. Next, coming to 96. 96. Read carefully. It's a very good question. And no love at first sight. Read the question properly. Yeah, some people have now started giving right answer. Kushi Chen, MIA2, I don't know, Abhishek saying the right answer. It's rupees 10. Because very simple. Question is, what is the average fixed cost of producing 100 units? Now, I know the quantity 100 units. Now I need the total fixed cost. Because total fixed cost by quantity is AFC. Total fixed cost given is 1000. Now the earlier information was just given to confuse you. Yes, there's no use. No? Total fixed cost is 1000 divided by 100 rupees. We get AFC, rupees 10. 97. Average variable cost curve slopes downwards at first and then upwards. So answer is A. Sanjana, you went wrong. Answer is A. Average variable cost curve is U-shaped. We discussed, isn't it? So if it is U-shaped, then how it can be C? Slopes upwards. It's not possible. Huh? A average will go first downwards, constant, and then upwards. So it is U-shaped. And it's an A. Abhishek saying you're right. Kushi, Bhanupriya, someone Lenovo. Next 98. ABC normally falls as output increases from 0 to normal capacity output due to occurrence of, I said now, ABC and AC are U-shaped because of law of variable proportion. And you have 3C, increasing returns, diminishing and negative. ABC and AC are declining in the earlier stages of production because of the first stage of the law, that is stage of increasing returns. Because of the stage of increasing returns, the fixed factor, because the indivisible fixed factor, now we are using, when we are using more and more of labor, the fixed factor gets more properly utilized and hence AC and ABC decline. So for 98, the answer is A. Vidul Nair. It's not B, sir. It's A. ABC normally falls as output increases from 0 to normal capacity due to occurrence of increasing returns. Yeah, that's right answer. 99. Beyond the normal capacity of output, ABC will rise steeply because of operation of negative returns. 99 is answer C. I said it falls because of increasing returns. It increases because of the negative returns. The third stage, right? So 99, the answer is C. 100. As I said earlier, there was not ample time, but it's a crash course, so we have to be fast. And I hope I am doing justice to the topic as far as possible, as far as the time is permitting. I need to cover the entire syllabus as well. The difference between average total cost and average variable cost is the average fixed cost. Here's the correct answer. by a number of students, Vanupriya, Aishwarya, and Abhishek saying the good answers coming up from you people. Is average fixed cost. 101. Bit careful. A firm producing 7 units of output has an average total cost of 150. Average total cost of 150. Remember, now if the average total cost is 150, that is average cost is 150. So total cost for 7 units would be how much? 150 into 7 is 1050. 1050 total cost. Out of that 1050, क्या लिखा है? Has to pay 350 to fixed factor of production. The total cost is 1050 minus the fixed cost 350. You get the total variable cost 700. Total variable cost will be 700. Is that clear or not? Now they've asked how much of the average total cost is made up of the variable cost. So 700 is a total variable cost for 7 units. So what is the average variable cost? 700 divided by 100 by 7, 100 rupees. So for 101, the answer is rupees 100. I hope some of you got it. If you have a paper pen, you have to do the calculations. Total cost is equals to 150 into 7, 1050. Total cost minus the fixed cost, 350. The total variable cost is 700. But the question was what? Question was how much of the average total cost is made up of variable cost. That means the question could have been a straight one. I could have given a straight question. How much is the average variable cost? ABC पूछा है. They've asked ABC. Got it? Good. Thanks Shubham and Manu for the response. So 700 divided by 7. So ABC was the question. That is 100. So in MCQs we have to be a bit careful. And I find some of you students are really very attentive and answering very good answers. Thank you for your response, guys. 102. What is the average total cost in producing 20 units? Read the question. Average total cost in producing 20 units. If fixed cost is 5,000 and variable cost is rupees 2. I'll give you time. You can use a paper pen. So people are saying 252. Someone is saying the right answer 252. Logic is very simple. Fixed cost is 5,000. Variable cost is rupees 2. The variable cost per unit is 2 rupees. Then for 20 units, 20 to 40. 5,000 plus 40. So your total cost becomes 5040. This total cost equals to TFC plus TVC. Now 5040 divided by 20 units. So we get answer D, 1 to 252. Next one, 103. For producing 100 units, total variable cost is 500 and the total fixed cost is 1000. What is the average cost? So I hope that is very easy. 103. What's the answer? Why Shubham, Shivani, why you answered C? Yes. Why C? Come on. It has to be B. Reason, total fixed cost and total variable cost together will make up the total cost. The total cost would be 1500, right? Total cost is 1500 and divided by 100 units because average cost पूछा है. The average cost will be 15 rupees now. Next, average total cost curve 104. Read the options. That's right. Option A, slopes downward at first and then upwards is the correct answer. Now comes marginal cost. Marginal cost, we know what is marginal cost? Additional cost incurred to produce an additional unit of the commodity. एक एक्स्ट्रा यूनिट ऑफ द कमोडिटी को बनाने का एक्स्ट्रा खर्चा जो लगता है, that is called marginal cost. That is TCN minus TCN minus 1, or it is change in total cost divided by change in output. So option A, yes, the right answer. The change in total cost due to 1 unit change in output. Option A. Next, now comes a very important question, a tricky one rather. 106. Marginal costs are closely associated with. Marginal costs are closely associated with variable cost, not average cost, it's variable cost. Marginal cost consists only of the difference of variable cost. Total cost का difference, the difference of total cost or the difference of variable cost, the answer would be same. Marginal cost will be the difference of either total cost or the variable cost. Why? Because total cost differs from one level to the other level. Total cost will differ only because of variable cost. Only because of changes in variable cost, there will be a change in total cost. So marginal costs are closely associated with variable cost. 107 also answer is correct. TCN minus TCN minus 1 is marginal cost. Now remember, TCN minus TCN minus 1 or TVCN, total variable cost of n units, minus TVCN minus 1, that is also marginal cost. Answer is variable cost and not total cost, because in 106 they are closely associated with. It is actually total cost is considered difference of only variable cost. So it is closely associated with variable cost. Shivani, thanks for the feedback. I tried to do the best of justice, though the time was not enough. But still, I've tried to do justice to the topic. Discovering only the portion of theory of production requires 2 to 3 hours, and the cost requires another 2 to 3 hours. But try to sum up just in 2 hours the entire thing. 108. The marginal cost curve intersects the average cost curve when the average cost curve is minimum. That's the right answer. 109. If the firm's average cost curve is falling, thank you, Pallavi Patil, for the feedback. If the firm's average cost curve is falling, then the marginal cost curve must be below the average cost curve. Harshit. 108. The margin, sorry, 109. If the firm's average cost curve is falling, I showed you on the diagram that so long the average cost curve is falling, marginal cost will lie below the average cost. So 109 is C. The relation between AC and MC 110 is, read the options carefully and then only answer. The relation between AC and MC is that option A is not possible, right? MC will be more than AC when MC is falling. That's not possible. MC will be more than AC when MC is falling. When MC is falling, then it is less than AC. So option B is also not possible, dear. Judge carefully. I'll show you this on the screen, the diagram once again, because most of you have gone wrong. Yeah, look at this. You see the marginal cost curve and the average cost curve. Forget other curves. When average cost is falling, marginal cost is below the average cost all throughout. And when the average cost is increasing, then the marginal cost is above the average cost curve. So for 110, none of the options are correct. Answer is none of the above. Look at the options, please, everyone. Someone is saying C. AC will be more than MC. When MC is rising, C is also wrong, yeah. When MC is rising, then MC is more than AC. So none of the above. 111. When AC curve is rising, now 111. When AC curve is rising, then marginal cost 111 with options. Yes, Khushi Chain, Abhinav, one of you right. It's B must be above the average cost curve. And then 12. When MC are below the AC, when marginal costs are below the average total costs, then when marginal cost is less than the average total cost, the average total cost are falling 112 with options. When MC is below AC, then AC is falling. The answer is B. 112 is B. And 13. Marginal cost equal to average cost कब होता है? When average cost is minimized. 113, Sanjana, it would be D. 113. Marginal cost equals average cost. Midul, Nayyar, Sanjana, क्या कर रहे हैं आप लोग? When marginal cost is equal to average cost, then average cost is minimized. When AC is minimum, then MC curve is cutting the AC curve. I hope you remember the diagram, right? Please, it's a request. Go through these portions carefully. You need to read it. 114. If the AC curve is falling, if the AC curve is falling, it's a very tricky question. I'll give ample time to read it. Very tricky question. If required, you go through the diagram. If the AC curve is falling, then I'll again repeat, it is a very tricky question. Yes, MI A2 has given the correct answer. It's D. It's almost impossible. It is impossible to tell if MC is rising or falling. Why? Because when AC is falling, MC may be rising, may be falling, may be equal. Just look at this diagram. Uh, again, it's again the board. When AC is falling at this position, please look at my cursor movement. When AC is falling, marginal cost may be falling, may be rising. That's the point. Or it may be equal to AC. So for 114, all of the correct answers. Um, I hope it's the last question now. And planned accordingly for the 2 hour session. MC curve cuts AC and AVC curves at their minimum points. Uh, some participants have raised their hands. That Shubham Garg, yes sir, बताइए. Some people have raised their hands. Maybe I may be allowed them to talk. Am I A2? Tell me. MIA2. You're not getting to you. I don't know. Yes, tell me. MIA2. Harshita, Harshita, I have allowed you to talk. I don't know whether this is not applicable. Not possible, I think. Harshita, maybe you'll have to write the chat box. That's it. So I tried to cover the entire topic in this short time period, and yes, thank you, Madhul and Abhinav and everyone for your wonderful participation. Some participants are raising their hand. Uh, yes, you can. Sanjana, you're asking ancillary industry. Ancillary industries are those industries which basically provide help to the main industry. Industries which are producing, suppose, the small spare parts, they are called ancillary industries, which are helping the large or the medium industries. Right. Someone has said, "Sir, can we WhatsApp you?" Yes, you can WhatsApp us. I'm available. I'll try to resolve the queries to the extent possible. Right. So thank you. We're meeting again the next scheduled day. Thank you.